It's another week on Business Morning. Good morning and welcome to the program. I'm Chimeze Obi Iwago.
Good morning, and I'm Ladi Williams. Let's tee off from the global oil market space. Oil was little changed this morning amid hopes that fuel demand is picking up in the U.S. as the summer driving season approaches and COVID-19 vaccinations there accelerate. Although rising case numbers in other countries are keeping a lid on the prices, Brent was up 2 cents at $62.97 a barrel, having risen to as high as $63.30. U.S. crude gained 1 cent to $59.49 a barrel after rising as much as 46 cents earlier. Prices have changed a little since a period of volatile trading ended last Monday. While the United States has fully vaccinated more than 70 million people, and in Europe, new infection numbers are falling as lockdowns take effect. India is reporting record new cases, and other parts of Asia are seeing caseloads rise. Analysts say that this is likely to continue to keep a lid on any revival of global travel and keep prices range-bound as the summer approaches.
And back here, all things being equal, the National Bureau of Statistics will be publishing the March inflation data this week, Thursday. Analysts at financial derivatives company are forecasting a spike in headline inflation to 17.8% from 17.33% in February. FDC also projects a jump in food inflation to 22.3%. While rising food prices have been an acute problem in Nigeria, it is also a global phenomenon in 2021. According to the Food and Agriculture Organization, the global food price index rose by 2.1% in March, driven by strong demand for basic foodstuffs such as vegetable oils, meat, and dairy. In sub-Saharan Africa, there's also a surge in food prices happening alongside the economic recovery. Exchange rate pressures have proven to be one of the principal drivers of inflation in Nigeria. Manufacturers are currently experiencing difficulties in securing imported raw materials as forex rationing continues to take its toll.
The Securities and Exchange Commission will hold the first Capital Market Committee meeting in 2021 on Thursday this week. The meeting will hold virtually with key stakeholders in the capital market, while the interface with the press on the outcome of the CMC meeting will take place on Friday. Issues bordering on implementation of 10-year capital market master plan, implementation of the fintech roadmap, as well as other salient matters relating to the capital market and economy will be discussed. The SEC had unveiled the 10-year master plan in November 2014 and has implemented some initiatives designed to reposition the Nigerian capital market as an attractive investment destination and a critical facilitator of capital formation for the economy's development.
And one of the Tier 1 lenders, Guarantee Trust Bank PLC, on Friday held its annual general meeting where it announced a dividend payout of 3 naira to its shareholders for the 2020 financial year. According to the Managing Director and Chief Executive Officer, Segun Agbaje, the amount is the highest payable by the bank amid the COVID-19-induced challenges last year. Let's take a listen.
The company for the year ended December 31.
It's the 31st annual general meeting for Tier 1 lender, Guarantee Trust Bank PLC,
and the company's articles of association.
Present to take part in the release of the financial statement for 2020 are a few board members and some shareholders in line with the COVID-19 protocols. Rendering accounts is what is expected at a forum like this, and so they get down to the business of the day.
Auditors and statutory audit committee thereon.
GT Bank PLC announces 3 naira dividend of the 2020 financial year.
That our company had paid interim dividend in the sum of 30 kobo per ordinary share for the half year ended June 30, 2020. Directors are proposing the payment of an additional sum of 2 naira 70 kobo per ordinary share as final dividend, bringing the total dividend to be paid for the 2020 financial year to 3 naira per ordinary share of 50 kobo each.
Major income statement shows the gross earnings for 2020 stands at 455.23 billion naira compared to 2019, which was at 435.307 billion naira, with profit before tax at 2.8% higher than 2019 figures at 238.10 billion naira. Similarly, the company's profit after tax rose by 2.3% in 2020 at 201.44 billion naira from 196.84 billion naira reported in the previous year.
The annual report is attractive and understandable to the layman understanding.
The managing director takes time to appreciate the shareholders and touches on some of their concerns, stressing that the 3 naira dividend is the highest paid by GT Bank.
This is the highest dividend Guarantee Trust has ever paid. We've never paid 3 naira before. So thank you very much for your support. Timing is not what is relevant in setting up of a holding company. What is relevant is that you do it properly and that you execute flawlessly, and that when the holding company is set up, it is profitable.
Guarantee Trust Bank PLC is a multinational financial institution that offers online and internet banking, retail banking, corporate banking, investment banking and asset management services, and has its footprints beyond the African continent.
Well, the big issue that played out at last week's spring meetings of the International Monetary Fund and World Bank is dealing with the rising debt stock globally as countries deal with the impact of the COVID-19 pandemic. Here in Nigeria, debt sustainability has remained a major concern based on the debt statistics published by the National Bureau of Statistics and Debt Management Office. Nigeria's gross debt rose by 20.1% to 32.9 trillion naira, while the federal government's borrowing advanced 23.4% year-on-year to 26.9 trillion naira in fourth quarter. For many, if care is not taken, Nigeria may be running into debt crisis. Well, Tunde Lemo, a former deputy governor of the Central Bank, will have this conversation with us. Good morning. Thank you very much, Mr. Lemo, for joining us on the program.
Thank you for inviting me.
Yes. So, I mean, many believe that Nigeria's debt has more than doubled, since 2014. How can we justify this level of debt and, of course, the dismal use of proceeds?
Well, you will recall that around 2016, we had what I would call revenue shock resulting from the drop in oil prices. Prior to then, we had the price rising to as high as $140 a barrel, and that plummeted very significantly. So there was a rational need for us to ratchet up our borrowing. And of course, last year was also a bad year globally because of the pandemic. So all over the globe, everybody, most countries were actually on borrowing spree. However, I believe the time has come for us to begin to look at the debt burden because it's becoming pretty worrisome. Some people are still in that El Dorado of a sense, saying that the debt to GDP is still around 22%, which if compared to our peers globally is low. But I say that we should not reference GDP because of the fact that the tax revenue is very weak in Nigeria. And so we should be referencing debt stock to revenue. And it's getting to a point now that we should begin to apply some brakes.
Well, despite the rising debt, Nigeria still plans to go to the Eurobond market soon. What's your take on this?
Well, I had the minister say so. I don't have the details with me. I believe it will be project tied. I believe, yes, we need to apply brake in acquiring new debt, but there could be exceptions, particularly if projects can pay for such borrowing. However, we need to be very careful. Zambia is already defaulting on the Eurobond. And so default, there is an inflection point. There's a point that it begins to affect your revenue. Last year, the bulk of federal government revenue that went to debt service was as high as 83%. And even this year, it could be as high as 60%. And so we must begin to see how we wind down and then ensure that we do not increase this stock. It's going rapidly up. It's going to approach around 38 trillion. Is it 38 or 28? 32 trillion.
32.9, yeah.
32.9 trillion by the end of the year. And this is pretty much high, especially the foreign component. The foreign component is already around 28 $28 billion, almost near the pre-2005 position before we got the debt relief. And so it's like Nigeria is on the march again. We need to apply the brake, otherwise we may have issues with debt sustainability.
Well, a lot of people will say it's not a bad thing to actually borrow, but it is what you use the money that you borrowed for.
I agree with you, but if you look at what we've been doing with the money we've borrowed, it's not as if we've been using every cent or every naira we borrowed on projects that pay for themselves. Because of the nature of our governance structure, a lot of it goes into salaries and wages, a lot of it goes into so many other things. If they were to be dedicated to infrastructure build-up and so on and so forth, we know foreign debt is good for capital accumulation. It's also good to power your economy. But when you begin to spend it on consumption and you do not have a rethink on how to reduce the size of governance, the cost of governance, and so on and so forth, I think is becoming an issue that must be taken by government head-on.
Now, taking back to the Eurobond issues, well, of course, we've seen what is happening in the U.S. It's expected that U.S. inflation would exceed the upper limit of about 2%, which means that dollar interest rates will increase. So what do you think will be the impact of perhaps higher dollar interest rates on Nigeria's debt sustainability? Meanwhile, we are seeing our naira being devalued.
Well, the issue really is, it depends on the nature of the borrowing. Some of the if the rates are not flexible, so the rates have been fixed, and if we're lucky to have gotten the borrowing when the dollar rate was low, I'm not sure so much of it will be repriced. But now that we are going to the market, we will then be borrowing at a new rate. But my worry actually is also the domestic borrowing. Yes, I know that as naira depreciates, of course, the debt burden becomes more. 2-3 years ago, we knew the exchange rate. Now, even the stock is pretty much high. Even if interest rate remains frozen, the quantum in naira is becoming more worrisome. But today, when you look at the way federal government coped last year, it was because naira borrowing rate was pretty much low. Central bank was embarking on what they call heterodox approach. But today, they are beginning to adopt the monetary policy orthodoxy by having to allow the bond price to be determined by the market. So before Q2, Q3, we may have interest rates on treasury bill rising to 10 to 12%. And the implication for this is very, very enormous, even for servicing of local debt, not to talk of the foreign debt. So both ways, it becomes double whammy. And this is really why we must begin to address debt stock.
But do you think these lending institutions have any responsibility here, knowing fully well that we might not be able to repay some of these loans? What do you think, should be done at this point, from the lending institutions' point of view?
You see, the lenders are wiser than you think. When you borrow so much, the country risk spikes. And even so, the rate at which you borrow new money is higher because, of course, everybody prices the risk. So it also affects your exchange rate because, of course, it affects capital flow. Everybody coming to Nigeria will say, look, given the debt profile, it is very unlikely that I'll be able to repatriate my capital when the amount is due. So it's much more than just the decision of the lenders. The lenders are pretty much smart, but again, the country risk, and then of course the terms of trade becomes more stiff. Nobody then wants to give you goods based on maybe what I call you don't have what the bankers call usance credits that you can import and pay later, and then everything will have to be front-loaded. And because of that, of course, it's going to affect importation and terms of trade. And this is really, really, really very complex. I believe Nigeria should understand that it's not anything anybody wants to be in. You can ask Venezuela, ask Greece, and other countries that have been in debt trap. And really, we must begin to look at that.
Now, how do we begin to actually deal with this situation? First of all, the question a lot of people would ask is, where does accountability, come to play in all of this? I mean, signing up a contract and you see perhaps the money are jacked up and all of that. Who accounts for what? How do we streamline some of these things that make us borrow so much?
The National Assembly has the responsibility to approve borrowing plan. And so we must begin to interrogate the skills that we have within the National Assembly to actually analyze the Nigerian's balance sheet, to look at what is possible and what is not possible. Because before you borrow, you must have the borrowing plan approved by the National Assembly. So what skills do they have? They must have experts that will analyze these numbers, interrogate, and advise them. Oh, this is coming to a level where there's no longer fiscal space, and then we must begin to think of alternative ways of funding. And it's not as if there are no alternatives, but we don't look into all those areas.
Now, let me come in there. What are the alternatives now? Can we look at that?
Thank you very much. We believe that all the expenditure plan of government, we take them as fixed, when we should begin to look at which one we can postpone and so on and so forth. A good example is the refinery that we are going to be refurbishing. This refinery
and the money will be borrowed.
Very old, the bulk of it, not all. This refinery is very old technology. This was the refinery that was offered for sale by Obasanjo just before Obasanjo government left, which could have been sold. And my take is that if this refinery was even given out free, Nigeria would be saved the humongous cost of the refurbishment. Because do the turnaround. We've been doing turnaround. But let's ask the question, how many barrels or how many liters of fuel have these refineries produced in the last 5 to 10 years? Don't forget, by second half of next year, Dangote refinery will come on stream. The capacity is more than the capacity of all the 4 refineries in Nigeria put together. So it will then happen that we will spend that much, and then by end of next year, the refineries will no longer be working because you have a more modern refinery that will produce at much better rate. And so the money will have gone down the drain. And you can go on and on and on and on. Why are we taking government expenditure as fee? Why can't we shrink governance? I was doing a study. The state of Maharashtra in India has a population of over 100 million. And with the economic size of maybe about that in Nigeria. And yet, the public officers in Maharashtra, the cabinet size is not more than 45. And what is the cabinet size of the entire Nigeria state? All the 37 states and the federal government. And we treat all these costs as if nothing can happen, nothing can be done about them. This is the time for us to begin to look at what we need to do to rein in all this expenditure and free up money and use it for social services, and not to say that this money is not available. The next thing is to go borrowing. I think it's really, really, really very sad. Because in 2005, when we were back on debt relief, and we got significant debt relief from the Paris Club debt of about almost $31 billion, the bulk of our debt then was foreign. Today, only 1/3 is foreign. 2/3, the local debt itself is very, very huge. So when you combine the two, you're having a debt stock of about $90 billion US, local and foreign. And this is very worrisome. What other things do we need to do? Let's strip assets. There are non-core assets that we are still keeping. Let's sell them. Well, it was stated in the budget. I don't know how far they've gone. So we free up some money and use it for social services. Then let's expand tax base. Today, our tax to GDP ratio is about 7%. We committed to IMF that in the medium term to long term, we'll increase it to 15%. Let's do that pretty fast. Let's ensure that even if we want to spend more money, we raise more taxes. We don't have to raise, apart from the VAT that needs to go up slightly, we don't even have to raise individual tax rates. It's all to bring more people into the tax bracket. I keep saying this. The middle, upper middle, and the upper class, we don't pay enough tax in Nigeria. And when you ask questions, they say, well, because we don't see government doing what they are supposed to do. It's chicken and egg. But I think every Nigerian should realize that for government to spend more money, let's sacrifice a little bit, get more tax instead of going borrowing.
Yes, so the federal government is reported to be running an overdraft in excess of 10 trillion at the CBN. Now, the debt is not captured in the natural debt numbers published by the DMO. Now, this is a huge number to be swept, under the carpet. The FG even alluded to this when it said it hopes to securitize the overdraft at the CBN. Now, as a former deputy governor, how can an unhealthy, situation like this be allowed in the first place to arise, and how can we ensure it never happens again?
Well, thank you. I left Central Bank 7 years ago, but let me also say that it is in the law of Central Bank as lender to government to lend money to government. But of course, the Act establishing Central Bank prescribes the limit. And so it's a surprise that it's around 10 trillion. But however, we understand the peculiarity of last year and all the issues around COVID, the fact that we didn't have enough fiscal space. And during a challenging period, central banks the world over actually expand their balance sheet and quote and unquote print money. You can call it QE, quantitative easing, or any other means by which, of course, the economy is lubricated. But I think that number is high, and the central bank and the federal government should securitize it. And the meaning of that is, of course, so that they can get the money from the private sector in. Otherwise, it fuels inflation. Inflation number is well over 17% now. And of course, when we call it high-powered money. When you inject too much of high-powered money, it fuels inflation, and inflation hurts the poor even more than the rich.
So how do we checkmate this printing of money? Is there a point at which, there's a checkmate procedure to this printing?
The Act, of course, provides the check. It's just for us to ensure that we operate within the Act. If there is a rule, if there is a need for central bank to do more, then the legislators could review the Act and see what they need to do by increasing the headroom. But I would not recommend that. I will sincerely say that government should look into borrowing in the market, local and foreign, if they have to. But again, we have canvassed this argument that there should be alternative source of funding.
Okay, now the Nigerian fiscal deficit as a percentage of GDP is approximately 5%. The convergence criteria for regional integration and best practice is usually 3%. Now, Nigeria has hardly gone higher than 3% historically. So what do we have to do, especially now that we seem to be foot dragging or deregulation? I saw yesterday one of the papers, the federal government are planning to defer the removal of subsidy by six months.
It's very, very, very tricky. I tell you this, coming back to convergence criteria, we've been busting the ceiling, but I can say that it's like saying all have sinned and come short of the glory of God. So many countries have actually been busting the ceiling because of the peculiarity of the now. However, like we said earlier, we should then begin to see how to reduce the debt stock, which is the argument we've been having since morning. We need to reduce this debt stock. Government should actually take off the subsidy. The subsidy regime is killing the economy. The labor must understand what government has to do. The subsidy on electricity, the subsidy on petroleum must go. However, it is not to say that government will close its eyes to the vulnerable. You know, if you read the IMF Article 4, actually IMF did counsel that even as they do this, there could be a program that targets the very, very poor and the vulnerable so that they ameliorate the immediate effect of that. But honestly, these subsidies are drain pipes and they need to go so that government can have some form of fiscal revenue consolidation.
Okay, so the DMO has just released the bond auction calendar. What's your take on that?
Well, I haven't seen it, but the calendar, if you study it properly, for the market to clear, given the appetite of which is what I referred to earlier, the government may have to settle for rates that are slightly above what they are now, which is why my forecast is that rates may have to go up by a few basis points, maybe 200 to 300 basis points going forward.
And do you see that encouraging more savings in the system?
Of course, it will help to mobilize savings. It's been very, very terrible in the past 15 to 18 months that we have very huge negative real interest rates. Yeah. Because savers are being shortchanged. You have interest rates as low as 2-3% when inflation is 15-16%, which means that month after month you are impoverished, and the punishment is only because you are saving. And I think we need to address that pretty high. But the flip side, of course, is that it's going to hurt government purse because government will then need to provide additional funding to service those debts.
All right, thank you very much, Mr. Lemo, for sharing your time with us this Monday morning. We do appreciate it.
It's my pleasure. Thank you for inviting me.
Well, Tunde Lemo is the former Deputy Central Bank Governor. All right, considering the full year 2020 corporate earnings season has come to an end, what should we expect as we advance further into the second quarter of 2021, and more importantly, in the new trading week? That's our conversation with Omotola Abimbola, investment analyst at Chapel Hill, Durham. Good morning, Omotola. Thank you very much for joining us on the program.
Good morning, Chimizi, and thank you very much for having me.
So full year 2020 corporate earnings season is over. Investors are looking ahead first quarter 2021. What are your expectations?
Well, I mean, Q4 2020 earnings season is nearly over and done with. We've been seeing earnings releases since the beginning of March, and up until 2 weeks ago, we just saw a couple of earnings results. For the Q4 earnings season, I think one thing we could say about the numbers is that across sectors we saw a lot of resiliency. Particularly in banks and the cement companies. Banks were able to report slightly better than expected numbers, particularly for the Tier 1 bank, despite the fact that we had a very challenging environment dominated by worsening asset quality as well as low interest rate environment. But despite that, banks still reported very healthy numbers. Same thing could be said for the cement companies that we have listed on the stock exchange. The trio of Boa Cement, Dangote Cement, and Lafarge Waco. The trade still reported improvements in their top line and bottom line on a year-on-year basis, despite the fact that we had the COVID-19 health pandemic that limited the investment spending in the economy and led to shutdown of activities over a period of time. But despite that, the cement companies were still able to report very decent numbers, thanks to the fact that we saw a significant improvement in government spending, particularly on infrastructure. And then we also saw an improvement, or let me say increase, in the prices of cement as well. So due to the combination of price and volume mix, the cement companies were able to report very decent numbers. So for me, I think those two sectors, did very well in the earnings season.
Abimbola, despite the COVID-19 pandemic, the banks, particularly the Tier 1 banks, declared some stellar profit figures. On Friday, GT Bank had its AGM declaring 3 naira dividend for 2020 financial year. What's your take on this?
I think for GT Bank, the performance was very stellar, despite the environment that we had last year. If you look at the earnings per share for the company, it went up by about 2% on a year-on-year basis in year 2020. Although we had a low interest rate environment that affected the yield on assets, the bank was able to offset that by causing its deposits, its interest rates on deposits. So as a result of that, net interest income was up on a year-on-year basis. On the non-interest income side of things as well, we saw a significant improvement. As we saw, several individuals, customers of banks, actually embrace electronic payments, transaction channel. As we saw restrictions in across the country. So that helps to boost up, non-interest income. Same thing for trading as well. Securities trading, delivered, very healthy profits. Bond and equity investors last year, and as a result of that, the bank was able to deliver, very stellar, very resilient, performance. And we saw that, dovetailed into its dividend policy for the year, where we saw the bank actually increasing its final dividend for the full year 2020 period to 2.70 naira from 2.50 naira, which translated into a dividend yield of about 9% as of the declaration date, which is still quite healthy for a tier 1 bank with a very solid track record.
Let's look at the fixed income markets. I mean, that market had the poorest performance in Africa in the first quarter of 2021, pardon me, losing about 16.5% in naira terms, according to the S&P FMDQ bond index. However, we have seen yield in the fixed income market prop up a little. Investors will be watching that market this week. What should we expect?
Well, for speaking to your point, in Q1 2021, the Nigerian bond market, had one of its worst starts of the year ever, and also the worst performance in the African region. In Q1 2021, we saw the S&P FMDQ bond index actually shed 16.6%. As we saw use in the fixed income markets across the benchmark curve, rise by about 380 basis points. So bond yields and price move in opposite direction. So when we see yields increase, that means prices are dropping. And that was exactly what happened in the first quarter of the year. And that performance driven by a couple of factors. And I'll mention 3 or 4 of them. The first one is that we saw much more lower liquidity in the fixed income markets. Last year, we had a liquidity loss in the money market due to significant maturities in liquidity field rally, in the markets. But this time around, we saw, maturities of bills actually drop, in the first 3 months of the year. So that contributed, to the various sentiments we had in the market. Also, we saw the federal government, also increasing its borrowing in the primary markets. In Q1 last year, the federal government raised over 600 billion naira in the bond markets, that primary issuances. So that also drove the bearish performance. And then lastly, we're also seeing a significant uptick in inflation rate, also inflation expectation that has, more or less catalyzed a bearish sentiment in the markets. Now, going forward, particularly for this week, I think the general outcome is, the general view is that over the short term, the outlook for interest rates is still biased to the upside. In Q2 2021, we are expecting much more smaller volumes of liquidity coming into the financial system. We're also seeing the federal government, remaining aggressive in the primary market by its borrowing. Last week we saw the Q1 2021, bond auction calendar, which more or less showed that federal government will still remain very aggressive in the primary markets. Also we're expecting, inflationary pressures to remain quite elevated. So I think the outlook for interest rates is still biased to the upside. But speaking specific to this week, there are 2 events that we should watch out for. There is an OMO maturity tomorrow, about 100 billion, and it will be interesting to see, whether the CBN will be refinancing, this OMO maturity, and by how much volume they will be refinancing the maturity. Also on Wednesday, we are having an NTB auction. If we see, further increase, in the NTB auction stop rates, I think, that will catalyze, further bearish sentiments in the fixed income markets.
All right, thank you very much, Omotola, for your time there. We do appreciate it. Have a blessed day.
And you too. Thank you.
And it's time for our opening calls to the market with Eddie Dong Ewan. Hello, Eddie. Good morning.
Good morning, Jimmy. Well, the market last week was actually quiet. We had just 4 trading days. We saw minimal gains here and there on some trading days, and then there was one decline, and then that offsets the gains that we saw as the market was down 0.13% at 38,866.39 points, while the equity cap was at 20.518 trillion naira. Now, the year-to-date loss has risen to about minus 3.7% in the market. Now, like I mentioned, activity was lower last week as we saw volume down by about 38% at 887.03 million units worth 9.19 billion naira. Value was lower by about 51.7%. And all of that was traded in 17,400 deals. Now, sectoral performance was mostly negative. The banking sector was down 2.25%. Now, we saw losses from GT Bank and Zenith Bank. Now, hopefully, we'll see investors react to the GT Bank's AGM meeting, which was held on Friday. So hopefully, we'll see some positive sentiment on that counter. But last week, that was down by about 3%. Zenith Bank was down by about 0.7%. Consumer goods was up 1.17%. We saw gains in that sector. Industrial goods was down 0.66%. We saw declines from Lafarge and from Boa Cement in the market. Insurance sector was down 1.49%, while oil and gas declined 0.31%. At the unlisted securities market now, that market has been positive for some time now. In previous weeks, we've seen gains from that segment of the market. It was up 1.44% week on week last week at 755.84 points, while the market cap was at 537.26 billion naira. We saw about 366,957 units worth 65.61 million naira traded in 22 deals last week. Now, the bond market continued its bearish run last week as investors repriced FGN bonds in anticipation of more liquidity in the system. Now, we saw yields rise by about 46 basis points in that market. We saw yields decline at the short end of the curve, but the mid and long end of the curves were higher. We had 30 deals on Friday worth 31.12 billion naira. Now, before we continue with the fixed income markets, let's just talk to David Adonri, a stockbroker at High Cap Securities, to have an idea of what to be expecting at the equities market this week. Good morning, Mr. Adonri. Thank you for joining us on the program.
Thank you. Good morning. Nice being with you.
Well, thanks for coming on the program. Let's just talk about GT Bank's AGM now. Shareholders approved the dividend of 3 naira for the year 2020. But what other takeaways did you have from that meeting?
Yeah, it was a very successful AGM, and you know the importance of the annual general meeting for every company. It's a statutory obligation, and it enables the directors to present the annual report of activities to shareholders and also enable them present resolutions or decisions to shareholders to approve. And so the good takeaway there was that the decision arrived at to pay dividends of 3 naira for the preceding year was unanimously approved by directors. So that was heartwarming and very, very successful resolution indeed. So that was it. Then concerning the market, because I heard you talking about the market, what may probably happen this week and beyond. The last week was a little bit bloody on Custom Street, but this week may not be so because market operators are now getting used to the fact that debt market is going to have precedence over equities because of rising yield. But there are also side factors that are likely to stabilize the equities market. Price of crude oil is firming up. And secondly, the economy, both domestic and global, have been predicted by IMF to be very, very successful this year. So those are factors that will stabilize the equities market. But however, we are in a buyer's market now. So it will be very, very good if investors understand that.
All right, Mr. Adonri, thank you for your input on the program. Have a lovely week ahead.
Same to you. Bye.
David Adonri is a stockbroker at High Cap Securities. Oh, Chimi, we've heard all Mr. Adonri has had to say. Hopefully, investors will understand the times in the market and will be able to position position in fundamentally justified stocks, as we always say.
Absolutely, and then of course we'll keep an eye on the OMO maturity for tomorrow, and of course the Treasury bill auction for Wednesday. COVID-19 restrictions are being eased across the UK, with all shops reopening in England and Wales. Let's see how the day is opening up in London with Juliana. Good morning, Juliana. Well, Prime Minister Boris Johnson says be responsible as restrictions are eased across UK. It's Monday morning. What is it like as shops, gyms and pub gardens reopen?
Good morning, Chimothy. One word, busy. It is busy, and I suppose that's going to be a much welcome relief for Prime Minister Boris Johnson and Chancellor Rishi Sunak. I got to Oxford Circus, which is in the centre of London, a couple of hours ago, and there were already queues outside the usual shops, so Primark, Nike Town, JD Sports, Foot Locker, lots of young youths who have been pent up pretty much for over 4 months, trying to get their hands on what is likely going to be some pretty decent sales. Hopefully I'll be able to get out at lunchtime and get something for you, Chimmy. But this is welcome relief. Of course, the Prime Minister had to put out that statement because even at midnight, a few hours ago, there were some pubs that opened up to some thirsty revelers, pretty, you know, desperate to get their mouths around a cold pint of beer. They were already out. So, you know, this has been long in the running. I believe England are hoping that this is going to be the start of the turnaround of what had been a pretty disastrous 12 months for the economy.
Well, I look forward to what you will get for me as the economy opens up. All right, David Cameron breaks 30-day silence over lobbying for Green Seal. He says he acted within rules, but admits there are important lessons to be learned. So what next?
Well, we'll have to wait and see. It's pretty important to make sure it's known that a couple of weeks ago, an independent regulator did exonerate the former Prime Minister of any wrongdoing. So really, the case is closed, but it has opened so many questions as to whether or not there should be any legislation put in place to stop former ministers, particularly Prime Ministers, that you can imagine, you can only imagine how deep and extensive David Cameron's contact book is. And he used those contacts to lobby support for Green Seal, which is now collapsed. It collapsed on the 8th of March, and with it, so many companies and jobs are at risk because they were a huge financier firm. David Cameron was one of their advisors, and I think one of the main issues at hand here really is, you know, the shares that David Cameron had in the company that were worth millions upon millions of pounds. They're now worthless. But if the government had indeed propped up the company and kept it afloat, then David Cameron would have had a major cash out. We have heard from Labour ministers they want an ongoing inquiry. Former Prime Minister, Labour Prime Minister Gordon Brown this morning has said he does indeed believe there should be some legislation. But David Cameron has put his hands up, saying that he was wrong to go through informal channels such as texting. But yeah, he has been cleared of any wrongdoing.
Well, it's a brand new week. What's on the radar for investors?
It is a brand new week, quite heavy corporate updates expected later this week. We're expecting updates from Deliveroo, Tesco, one of the big 4 supermarkets here, and also JD Sports, which has done exceptionally well during the pandemic. And then tomorrow is the big one, GDP figures for the month of February. January's GDP came in at a contraction of 2.9%. The forecast is between something of growth between 0.4 and 0.5%. We have had really positive PMI signals, so it does indeed look that the British economy is finally on the trajectory of growth again.
All right, we'll look forward to those data and corporate news, and in the meantime, we hope to see you later in the day. Okay, let's take a peep into the crypto market with Ladi. Well, Ladi, the weekend seen quite good for Bitcoin.
Yes. Quite
60K.
60,000. And still 60,000 right now. And the market cap standing at $2 trillion this morning, up 2.45%. 24-hour volume, $137.61 billion. The volume is down about 11% this morning. Bitcoin dominance still going down. We have 54.16 this morning. Price of Bitcoin, 60,642, up 1.07%. 24-hour volume, $45 billion traded. Let's talk to Olumide Adesina, our financial market analyst. Hello, Olumide. Great to have you.
Yeah, hello, Ladi. Happy Monday.
Happy Monday. Good morning. Well, Olumide, 14th of April, we're going to have the Coinbase going public, one of the biggest exchanges in the world. How is this going to impact altcoins and Bitcoin price at this point?
Well, what I can say is that a lot of investors are waiting on the sidelines for this long-anticipated direct listing because don't forget that this is one of the pioneer crypto exchanges founded by Armstrong, and over the years has grown organically. And what investors are looking at is that those that don't want to get exposed to volatility in the crypto market, just like as you see rightly that the market has been swinging up and down, could get access to owning stakes in Coinbase. And let me go back to the numbers. And Coinbase actually is the most valuable. Recent data suggests that it has a market valuation of about 90 billion. It has about 56 million verified users in Q1 2021. And the report showed that it's going to make about $800 million. That was doubling almost what it made in 2020. So that tells you how valuable such company is to the eyes of investors. The only concern investors are having is the systemic risk about regulation that will come to the crypto market. You know, the crypto is decentralized, and meaning that there's no central authority government. So a kind of regulation could deter further growth, and that could affect the price of Coinbase. But if you look at other metrics, Coinbase has Circle, another stable coin, that is already showing record performance. It has recently made a relationship with Visa, it has a long spread hold in global payments. Also, the company is a custodian of crypto assets for institutional investors and presently manages about $122 billion.
Anyway, Olumide, I'm curious to see how after the listing, how Coinbase stock is going to perform during a bear market. You know how bad the bear market in crypto can be.
Yeah. But I think that will not be a major concern because, like I said, the company has been able to hedge its business into many things. It also has a money business. And this startup has other metrics that is going well for it. So I think the bear market will not be enough to hedge. The only risk that will come is the rising U.S. yield and the overall stock market sentiment. That could deter the position. But a lot of investors are seeing that it could.
All right, Olumide.
Thank you so much.
All right, if you can hear me, thank you so much. We'll keep tracking that listing to see how it goes this week. Thank you so much. All right, price of Ethereum, $2,181, up about 2.34%. BNB surging this morning. Last time I checked, it was about $600, up about 19.85% this morning. BNB is on the tier right now. ADA up about 9%. DOT up 3.35%. XRP having a pullback there, down about 7.23%. So, Jimmy, it's not looking so bad this morning. So
what coins are there to watch this week?
Well, this week, I'm actually watching ADA this week, Cardano.
Why?
It's looking quite bullish on the one-day chart. I was checking it out this morning and see there's a MACD cross on the one-day chart, and the histogram, the green part, is starting to build up gradually. We have a dog face forming on the Bollinger Band, so it's looking quite bullish.
Okay, we'll keep watching that. But, of course, this is not a financial advice. Let's take note of that. All right, that's it on the program for today. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.